Welcome back to the channel. In today's video, we are going to go over contract selection. Now, this is a very common thing that I get asked a lot, which is, how much time should I buy? What strike price should I get, etc., etc. And to be honest, it really differs. It really depends on if you are planning to swing trade, if you're planning to day trade, or what setup you're basing your trade off of and what time frame is that setup on, right? Because if you're basing a trade off of a monthly setup and you buy a weekly, you're not giving yourself enough time. There's a whole bunch of stuff that goes with that. You guys get what I'm saying? So I'm gonna kind of break it down for you really quick on the difference, and how you can kind of figure out contract selection based off of your trade. All right, so if you're swing trading, me personally, if I'm swing trading, I'm taking trades based off of higher time frames. So that means I'm really looking at the quarter, the month, the 2 week, the 1 week, the 1 day. I'll look into the 4 hour and the hour, but usually I'm not dropping any lower than the hour. Because once we get into the intraday smaller time frames, you're looking at intraday price action, and that's not necessarily going to supersede the 1 month or the quarter, right? And so again, if we're swing trading and we're basing our trades off of these higher time frames, like the 1 month, you're going to need to have your contract selection correlate that, right? So usually for me, um, I'm in contracts that are at least a month out, at least a month, right? And those are usually monthlies. Um, to be safe though, you could do 2 to 3 months out, and there's nothing wrong with that. It's gonna be a slower, move, so to speak, but it's gonna be a lot comfier, and it's gonna be a lot less monitoring of these smaller time frames because you're properly positioned, right? You need to let the position work, which means if it's a 2-1-2 up on a monthly time frame, it could take 2 months for that target to get hit, right? Your 2-1-2 target, it could take 2 months for that target to get hit, right? So that's why if you're basing trades off of a higher time frame, you need to buy time. All right. Now, day trading or intraday trading, I trade. I base my trades for day trading and intraday trading off of lower time frames, but I also keep in mind the higher time frames. Right, we want full time frame continuity, but sometimes you can take day trades that go against time frame continuity. But for the most part, we take trades based off of lower time frames, but you want it to be in confluence. So the time frames that I'm watching for day trading slash intraday trading is I'm watching all these time frames, but I'm actively, while the market is open, I'm actively looking at the 1 hour, the 30 minute, the 15, the 5, and the 1. The 1 minute is kind of more advanced. I wouldn't say to check the 1 if you don't know what you're doing. The 5 can be a little noisy too. If you want to be really safe or just be comfy, stick to the 15, the 30, the hour. Maybe look at the 5 every now and then, right? With day trading and intraday trading, I usually plan to be in and out of a trade that same day. So I don't necessarily need to be buying all this time. Now, it depends. Maybe the weeklies don't have liquidity or the contracts are ugly, the spread, blah, blah, blah. If that's the case, then I might have to buy something a little more further out just if they look better. But for the most part, I'm usually trading weeklies or next week's contracts. So that means that the contracts expire that Friday of that very week or next Friday of the next week. So if it's Monday, my contracts I'm trading expire that Friday, that same week. Y'all get what I mean? Weeklies or next week's expiration. And the reason I'm trading those is, again, I'm my target is based off these lower time frames or maybe even a daily target. So like 2-1-2 on the day, my target is the 2-1-2 daily high. That's not, I mean, it could change something here, but that is not the same as swing trading, right? This one, we're in and out within the day. That's it. You know, swing trading is a little different. If I plan a swing trade, I might I might add to the position. I might scale in. You know, there's different plannings I do for swing trading, but for the most part, you know, I hope that makes sense, right? Swing trading, we base it off of the higher time frames, and you need your contracts to be correlated to those higher time frames. So at least a month, but 2 to 3 months to be safe. Let the position work. Day trading and intraday trading, we want to know what's going on in the higher time frames, but for the most part, I'm looking at intraday time frames, the hour, the 30 minute, the 15, the 5, maybe the 4 hour. I'm also gonna look: are we green on the day? Are we 2 up on the day? Where's our target on the day, etc., etc. And we're usually trading weeklies or next week's expirations. All right. So yeah, that is it. I hope that made sense, guys. Again, it's not that complicated. If you're trading a setup on a higher time frame, you need time to let that setup play out. And if you're trading a setup on a lower time frame, you don't need that much time to let it play out, because it could play out in 5 minutes or in 15 minutes. You get what I'm saying? So yeah, hope that one helped you guys out. That was just a really, really quick, brief explanation, and hope it helps somebody figure out, what contracts to buy, etc., etc. All right. If you guys have any questions, feel free to leave a comment. If not, feel free to hit that like, subscribe, notification. Catch me in the Discord. The link is in the bio, and I will catch y'all on the next video. All right. Peace out.